Hello and welcome to Weekend Investing Daily Bytes. We will first go through some important announcements. So, MI Evergreen, as you all know, is a strategy that combines gold with CNX 200 universe of 20 stocks selected in this strategy. This is the culmination of a lot of our experience with gold and momentum strategies. And you can see that since the launch in December 21, the strategy has done really well. Gold is now, in the last 6 months, providing the adequate hedge that this market, the large caps actually need. So 17.5%, 17.2% on the strategy since we launched, and the index has done the CNX 200 index has done 5.3 since then. So we had been running a special offer to bring people into the idea of having gold, because I genuinely feel that you must have allocation to gold in your strategies, and this is one way of doing that. You could use this new year 30 code. This is valid till January 10th. Please make use of that. Also, I want to update and remind people who have uh, been loyal customers of Weekend Investing that once you cross your first year of subscription, you are eligible for the Wild program, which is the Weekend Investing loyalty discount program, which is the first program of its kind launched by any small case manager. Uh, and I'll quickly tell you that once you try to renew, you just have to click apply offer, and it will automatically apply the discount that is applicable to you. In case there is some technical glitch, you can always feed in the code like this: month, year, while 20, while 25, while 30, depending upon if you've spent 1 year, 2 years, or more than 3 years with the same strategy. So these discounts are available to you. Small case platform by itself will send you some 10% renewal discount, but these are preferable if you can go for these discounts and not go for the 10% discounts. The idea is that you must remain invested for a reasonably long time to really get the benefit of equity markets, because equity markets move in cycles and there is no straight linear line of returns anytime. So coming back to the episode, that today's episode is very dear to me. It's Advantage India. We'll talk about some statistics which look really good for India and how India will keep doing well in the coming years and decades. Today's market, IT was leading the market at plus 2.8% after the U-turn by Nasdaq on Friday. It does seem like the inflation is coming to some sort of a control worldwide, and although the interest rate hikes have not yet stopped, but there is more hope going forward that we'll come to a closure on that in a couple of quarters. Indian IT stocks rallied on back of Nasdaq stocks, energy, metal, infra, autos, commodities, PSU banks. They also rallied quite hard. The Nifty opened with a gap up and remained pretty much uh, above the 1% mark for most of the day. This is in contrast to weakness last week, and we are now in some sort of a trading band where a double bottom could be confirmed once we break above the pivot level that was formed earlier. I'll try to show you on the chart. Small caps, however, did not perform along with the market at only 0.4% up. Mid and small cap index also 0.7% up. Nifty next 50 0.8% up. CNX 200 and CNX 500 1.2% up, and Nifty 50 up 1.35%. In terms of weekend investing strategies, NNF 10 was doing the best at 1.4%. India top 10 also 1.4%. MI 50, MI Evergreen, MI ATH2 all doing all right. Other strategies between 0 and half a percent. MI 25 was a laggard today at 0% uh, gain. Today's heat map, you can see Reliance, Levers, Bharti, ITC, L&T, Axis Bank, and TCS, and along with Infosys and HCL Tech. These were the uh, stocks that were pulling the index very, very hard. There was some losers in Bajaj Finserv, HDFC Life, Titan, Bajaj Auto, etc. But overall, a decent outcome. Top gainers: CG Power 7%, Godfrey Phillips 6.5%, KEC International nearly 6%, L&T Finance 5.2%, Ether Industries 4.6%. Vodafone Idea down 4.5%. So Vodafone is in some sort of a mess. Lenders are not willing to give more money. My own sense is that it will get sold sooner or later. So it may see much lower levels before some white knight comes in. Ken Plus Sanmar minus 4%, Kansai Narulak minus 4%, Seat minus 4%, fertilizer and chemical also down 3.5%. Excuse me. So coming to Advantage India, this is a chart source from United Nations. Saw it on Twitter somewhere. There's a very interesting chart that China on the left side at 1.42 billion people, the you can see that the population curve has peaked. This is a projection by the UN that from this peak there is only downhill to go, and they've projected that by 2100, in the next 70 years, they will come down to nearly half the population. Each of these layers represent different age groups. So this is 0 to 4, this is 5 to 14 years, 15 to 24, so on and so forth. So this four layers of pink going to red are the working age population. And you can see that the working age population has already peaked. So very young populations peaked in 1990s. Middle age population peaked in 2000, and maybe 2010 and 20, this last two pink layers have peaked. So they don't have new workforce basically, or enlarging workforce. They have shrinking workforce, and also shrinking demand because of that, because a lot of the people are moving into this seniors group here. So there will be demand of different kind, but the regular demand from working age families is going to be reducing. So this is a great sort of uh, chart to show that India, on the other hand, on the right side, we still have another couple of decades to go before we come to this position. And we must not forget that most of the gains in the Chinese economy came just before their working age population peaked. So our working age population is here. You know, some have peaked, some are yet to peak, but this is our golden period for the next 10, 15, 20 years, I think, before we also move into the same situation as China after 2060 or something like that. And we have very large numbers in these four categories of the working age population till the end of the century, actually. I mean, just see, at the end of the century, their working age population is only this much, maybe zero point 0.3 million, 3 billion. And we, on the other hand, will have nearly zero point 0.6 billion or even more, zero point 0.7 billion of working people till the end of the century. So we are, from a demographic point of view, extremely uh, well placed. Now, the only thing is that whether we are able to make use of this fantastic advantage or not. So by 2030, which is next 7 years only, India will be the most populous nation, most college graduates, largest middle class. That is the biggest one, actually. Most cell phone internet users, third largest military, third largest economy. We are currently fifth largest, I think. All coexisting in the world's largest democracy. 600 million people under the age of 25, and $2 trillion spent on infrastructure. We see, normally when we look at markets every day, we look at a lot of narrative every day. We lose the bigger picture where we are going. And this is the bigger picture actually. With this stable government in place, another 7 years in the current regime, I would think, and we could be very near this third in the world mark. And of course, a lot of people say third GDP basis does not mean anything unless uh, you know average GDP per capita improves. But that is also coming. Once the GDP goes to that level, and we have that kind of a growth of 6, 7, 8%, that's coming. I mean it cannot go away anywhere. So India is expected to overtake China as the most populous country in April of 2023. The UN predicts that this shift will mark the transition of the world's factory status. And already there are so many reports stating that every Western company that had sourcing from China is looking for an alternate source also. If even if they are not withdrawing from China, they are definitely looking for another place where they can shift some percentage of their sourcing from. And India definitely is one of that uh, source to get manufacturing done from. With China's population already shrinking by 2050, China's population will be 8% less than what it is now, and we will keep growing till 2064, uh, almost twice as large as China at that time. So, in terms of brief points, India is expected to provide more than a sixth of the growth of world's working age population, 15 to 64 year olds between now and 2050. So, which is only 2.5 decades. I mean, if you are 25, 30-year old, this is your prime, you know, time of your life, going from 25, 30 to maybe in the next uh, 27 years going to 55, 60. So those who are 25, 30, 35, the prime is right here knocking at your door. And of course, I also feel very lucky that even at the age of 50, in the next 2 decades, if I can see the country prosper, that will be amazing. India, of course, has displaced Britain as the fifth biggest economy recently. We are aiming for third biggest by 2029. The UN says that China's demographic slump is a disaster for its economy, and they have the 4 to 1 phenomena. What is the 4 to 1 phenomena? That each single child is responsible for two parents and four grandparents. So, with social security net in China not being as good as the Western countries, they are also extremely underfunded for this kind of a social issue that's going to come around. This is a chart of Shanghai Composite uh, over the last 30 years. You can see that uh, they did really well from 2006 to 2008 period, but they have kind of gone sideways since then. India market, of course, has been continuously growing. Since the great financial crisis, Nifty has done extremely well. Uh, the Chinese market has gone nowhere, actually in negative territory. Since COVID, while they didn't fall as much, they made the entire world fall, but they haven't gone anywhere. Whereas Nifty fell but has gone up dramatically after that. So, from all parameters, the way Indian market stands strong today, the way manufacturing is coming back in India, it is only so much time that earnings catch up and FIIs start to return again. Right now, the Indian market is somewhat stagnant for the last year because FIIs have been selling out. uh, I think the time is not too far when they make a U-turn and start coming back from our market. And I am very, very hopeful and optimistic about the Indian markets going forward for the next decade. So keep that in mind when you create your plan for next 5 years, 10 years. That you are, very lucky to be sitting in one of the fastest growing markets in the world. Don't be pessimistic about the country, because at the end of the day, the numbers are pointing to the fact that there is no stopping in India. So thank you so much for watching this, and please do share these videos, subscribe to the video, like the videos if you do, and I'll see you in another video. Bye.